All right. What is good? What is good, family? Appreciate y'all for hopping on this call. Like I said before we had started about 7 minutes ago, I'm super grateful for you guys. I got my camera on, right? Cool, perfect. I'm super grateful for you guys. Let's get into it. It's Saturday night, so I know that you are the individuals that want to sit here and take your trading to the next level, right? I love diving into institutional concepts. Whether you're new to the concepts or whether you're a veteran, it's always exciting to sit down and be able to see how somebody else's terminology, see how somebody else's, just structure and the way that they look at the market, will help you in your trading journey. So again, I'm super grateful for you guys, but we are really going to get right into it. I'm going to go over pretty much my one main setup from this week, which is from the S&P. And then I'm going to have you guys share some charts. We'll go over some of your analysis, touch on any pairs that, you may have seen a setup last week or going into next week, what kind of setups we could be looking for, right? So if you have some charts, be ready to drop those. I am going to start on the indices. I normally start with the dollar index, but again, honestly, we'll get into that a little later on. All right. Now, I'm not going to walk through the basics for everybody when it comes to institutional trading. You guys know where to find it. Again, even very more qualified individuals than me that teach us this on a daily basis. So you guys have to make sure to plug into the education, right? Now, just to break the education down simple for anybody on the call that may be new to the way that the market structure works, right? Most of the time, this is called an Elliott wave, and you'll see the market move in certain wave patterns. We all know that the market goes up, down, or sideways. It obviously can't go up forever. It can't go down forever. So a lot of the times you'll see it make a wave down, then maybe move sideways, and then make a wave up, and then move sideways, and then make a wave down, right? So what I'm going to show you guys here, right, is the same structural concept, right? Just like we do break of support and resistance. But now we're going to go ahead and identify a couple of things that really aren't taught to the normal eye, aren't taught to the main 96% of people that fail in these markets, right? So as you see the diagram I got over here, what they like to do is mark down, create liquidity, which is just buy orders and sell orders. They'll take one side, move it away, and then, kind of answer a big question that a lot of people get for me is if I use fibs and whatnot. And you got to understand that the only way I'm going to bring out a fib is if we get a break of structure, right? Because this Elliott wave is a move down, right? We're in a downwards trend. So you don't want to be looking for buys. Now, when we do get that next push up, that breaks above a high, right? High, low, lower high, lower low, lower high, lower low. And now you get a new high. Now you could be seeing a shift in the structure, right? This would be a 0 to 1 and then a 1 to 2, and then you would see it shift up, right? So this is when you can pull out the fib. When you get this break of structure, right, this is where you can go ahead and take your fib, take it from a low to a high, and really anything, with a 50% or deeper, I like to think of it as like a discount, right? Why would you want to buy anything above the 50%? I'd rather get it way off, whether it's 50% off, 62% off, 79% off. So that's how I use my fib. We're going to go deeper into that. But I am recording this as well. So anybody that isn't here or wants to catch it on YouTube, I wanted to go over that because I had some questions on there. But, overall, that's what we're looking for, guys. So I'm going to go ahead and start from the top, right? We got daily structure on the S&P 500. Now, when I look at this pair, right, again, number one, and I actually don't have my confirmation checklist pulled up at the moment, but let me go ahead and show y'all a chart we'll be diving into later, right? Look up here as a confirmation checklist quick. Number one, trend in market structure. That's why I just spent the first couple minutes, going over trends and going over market structure, because this is literally the first thing that we need on a bigger time frame, whether it's a weekly, a daily, a 4-hour, even a 2-hour or a 1-hour. You want to know what kind of market structure you're in, an uptrend, a downtrend, or a sideways moving market, right? And then number two is going to be where's the money. So those are the two we're going to kind of focus on to start off. Again, for anybody taking notes, whether it's, notes on your charts or notes in the book. Again, market structure is number one. Looking for money is number two. So let me minimize that. As I'm looking at the daily structure, all right, we really want to see, all right, you guys can obviously tell that over the past couple weeks, right, since April, last couple months, we have been in an uptrend, right, after this huge down push. Now, the thing is that you can understand this is a nice uptrend and everything, right? And it looks like, there's really no stopping it at the moment. When we look up here to the left, there really was no up candle before a down move really quickly. It just kind of fell, right? So overall, when I look over here, right, you could either mark this off as, maybe some liquidity hiding above here, which again is just a pool of money. I'll go ahead and throw a little money sign up there. So this means that the markets want to come take this money at some point. And below this, you guys may notice the imbalance, the daily imbalances or imbalance that lies right here in this candle, which means during this day, there were no retracements of wicks back up into it. So you all know how we like to draw those. And again, this call is going to go deep into the price action from this week, but just showing you why price action happened this week, right? So overall, we got a big imbalance here. As we would have looked on, at the beginning of the week right here, when you look to the downside, there's really no big imbalances that I can notice, right? There's none in here. This wick had captured all this. This is really the closest one. So if you wanted to have a possible downside target, this is what you could have kept your eye on. All right, anywhere around 2,900, right? 2,900 also has that confirmation with quarters theory, right? I actually just dropped a YouTube video earlier today on quarters theory. So if you haven't watched The Favorite from Mike Miles or really heard about this yet or studied it, I would definitely go check it out. I've been using it from the jump, right? So now I'm training your eye to see, hey, look, we're either going to move towards this big imbalance or this imbalance on the daily chart, right? So that's pretty much all I'm going to do on the daily. This is what we're looking for. Previous weeks, we had talked about this also just being equal highs and at the end of the day, a pool of money. So overall, bias was bullish, going into this week. As we go down to the 4 hour, again, we have trap price already in between these two imbalances. So that's all I need to focus on. Right. And I'm going to go ahead and go into replay mode as well. I'm going to take this back, even though you guys have already seen it. It's all good, right? So this was going into this week, all right? And last week when we ended off whatever webinars we were doing, right, price action has been clean to the downside, right? We see that, these lows were taken here, price moves up, creates these highs, comes down, pretty much retraces back into all of this imbalance, right? Again, for any Fibonacci traders, break a structure, right? You had that nice 70 tap right there. But either way, my main focus last week, that we still left equal highs here, right? So again, this is still just number 1 and 2, market structure and pools of money. You're looking for those equal highs because the markets want to go attack those, right? So as we look there, all's is good. This is all I'm really going to do on the 4 hour, just showing you guys this liquidity pool here, right? And again, for anybody that wants a little bit more visual, right? You just think of this as a pool of money, right? It's honestly just a pool of money hanging out right here. So with all this clean price action, right? And we had talked about this clean buy price action all week last week or the week before. All of this, right? We took short sells, a little bit of sells on this to end off the week. But now as we play, let's see how market opens, right? Going into, the open of the week. So this candle right here was market open. It might be a gap on a couple people's brokers or whatever it may be. But overall, you want to know where the market opens, right? And if you're not sure on how to identify that, you can even go to settings and turn on your session breaks, right? Turn on your session breaks, and you're going to be able to now break up the market within 24-hour periods, right? So this is right when market opened up. at 6 p.m. on Sunday. All right, and what do we see? We see the market go ahead and move straight up above our liquidity area. Now, there's no trade that we could have taken on that, right? Because it was just market open. I'm just, it's just, it makes sense as to they open it, they go ahead and take out the big pool of liquidity. Now, all we got to do is react. We just got to wait and see what they give us. So over the rest of the course of Monday, as you see, the market's just moving sideways, right? And what we're doing is just waiting for evidence, right? We just moved above our liquidity zone. Yes, we want to reach higher targets, but what is the play going to be? Because, right, we left all of this imbalance, right? Not only to end off Friday, did they kind of print, right? And I'm going to change this color. And this is number 3 on the confirmation checklist that we're about to go into now. So everything else has been bigger time frame. Everything else has been bigger time frames because of, let me go back to Telegram, right? For the trend market structure, where's the money, liquidity, institutional candles, right? And imbalances. We were just doing imbalances, institutional candles. So that's what I'm going to show you guys now, right? This is a sell on Friday just to buy it back up Sunday, right? So what do we like to do with these institutional candles? You guys know we can play off the open. We could play off the 50%, whatever it may be. So this is a downside target that you could have had just sitting there all week, right? Market opens up, moves up here. Now, this is 2 p.m. So we're going to go ahead and let the day end. Cool. So the day ends, right? And what did we leave? Pool of liquidity to the downside, right? And this is, I promise you, like, it may seem like I keep doing the same things over and over again, but that's all it is. Because it's literally the markets are the same thing over and over and over again. It's all patterns. It's all recognition, right? So they build up that money Sunday, Monday, right? Knowing that they do want to take the market higher, but what do they got to do first, right? Going into Monday night's price action, Asian session, we get a 6, 7, 8, 6 p.m., 7 p.m., 8 p.m. run up. And then what do we get? We get this engulfing candle to the downside on the hour, right? So this is the exact kind of evidence that we want to see, right, in our schematic. All right, and I'm going to let this play out a little bit more, and we're going to hop back to the 4 hour just so I can show you guys, right, how it's the same thing. Look on the 4 hour, how we had this big pool of liquidity. We open up, we move into liquidity. We have 16 hours to sideways move it, up candle, down move, right? Same exact thing you're looking for every single time, right? We could look for it as an accumulation side, right? Down candle. This was a big up move. It came down and retraced down to 3,000, but either way, same difference. So this is really key. So now when this happens, right, what do we identify? We identify we have this money, we had this money. It got taken to the upside in this series of candles, right? Let me send it to the back. It got taken to the upside by this set of candles. We had this strong move down, which shows that money bought to sell, right? Drop the $1 million lot buy to drop the $2 million lot sell. They left an imbalance for us to come play in. So now all we got to do is wait for the market to pull back into this imbalance. And again, this hasn't been a broken structure yet. I'm going to show you that it pretty much makes equal lows. So it did pretty much break these lows, right? Broken structure. So you may not have caught this, and we didn't, which is fine, right? You may not have caught this retracement in here because of this imbalance. And this wasn't the play, because we're going to get into the play of what it was. But I'm just walking you guys through price action nice and slow, right? So market comes down, right? And now you just wait for that low to be created. You wait to see money start moving back up. So now what? You can take your fib, because we had a high, and now a new low. So let's see if we can make a new lower high. So if you were to take your fib, take it from the high point, bring it to the low, as I pull it out, look how the imbalance lines up with the core discounted entries that we could take from the Fibonacci. The Fibonacci isn't magical, guys. It's not magical. It's going to line up with all these other things that you were training your eye to see. Imbalances, point of interest candles, quarters theory, right? Because these are where the banks and the institutions are playing, right? It's not by accident that they're going to pull the market back between the 61 and the 79, you know, whatever percent of time that they need to, right? So I'm going to go ahead and take the fib off there. But either way, now, as you see this market come back up here, you can start taking, again, any positions. You know, let's say you took one at the 68 or the 61.8, and this is why we trade this way, because look, at most, you're going to risk 18 pips or 18 points, guys. That is such a small risk. And what do we want to target? At least target this low, which is like a 1.5 to 1. But overall, and again, if you follow along with the educators, we were targeting this candle pretty much all week because of this clean price action to start. So overall, you're looking at almost a 2.5 to 1 ratio here if you're entering off the 61, right? And I'm going to pull this back. I want to keep this clean for you guys. So I'm going to take the fib off, right? So price moved into the imbalance and through the imbalance, and there's actually 3 entries on a point of interest candle that you can take. All right, so this was 4 hour. Now this is 1 hour. You could take it off the wick. You could take it off the body open, or you could take it off the body 50%. All right. Before I move on, does anybody have any questions over something I went over so far? Market structure, imbalances, point of interest candles. Does anyone have a question? I don't want to lose you guys going through it. If not, go ahead and drop some 888s in the chat. Let me make sure you guys are following along. I'm going to go ahead and write a couple things here. You know, again, I try to break it down as simple as possible. So if you guys are following along, then perfect. You know what it's mean. The questions could come later when I look into your guys' charts. A wick entry is going to be a little bit more aggressive. A body entry, a little bit more moderate. All right. I'm trying to move that over to the right. And then a 50% entry, right, is going to be more of your safe play. I don't remember the word I used to use for that. Your low risk.
Conservative.
That was it. What's good, Sharonda? That was
it.
Thank you. Conservative. I haven't shown this in a while, but yeah, guys, really three different entries. All right, look, y'all blew up the chat. What session do you trade on? So that is an amazing question, Ronald. You know, you should know, you know, when we look at, you know, Forex market trading hours, Forex sessions. Bless you. Bless you, my dog.
I don't see a chat box.
Well, there's hella 8s in the chat box.
Oh, I'm capping. My bad.
All right,
I'm capping.
no, you're good. There weren't any other questions. Cool. Everyone else straight. So cool. So, you know, answering what sessions do I like to trade, y'all should know that, you know, the most volume, the most liquidity during sessions is London and New York. Now, my normal hours are 2 a.m. to 12 p.m., but there have been times where over the last couple months, especially with everything going on since March, that I have opened up my trading times a little bit. If I might take, because I might take something during Asian session, or if I don't, I wait till London. So to answer your question, Donald, normally your focus should be 2 a.m., which is London start, to about 12 p.m., which is new time. But, you know, if those hours don't work for you, then you're more than welcome to trade Asian session, right? And the concepts that I'm teaching you guys here is really going to work for any session. But It is so primary in New York. As you guys see, this is an 11 a.m. candle. All right. This is an 11 a.m. candle. And again, you guys see that during Asian session, it didn't give you that entry, right? It gave you the short retracement entry around midnight. So a lot of the time, you really want to catch that London and New York overlap here. All right, cool. So everybody's following along. Good. So here's your point of interest. Unfortunately, there were some of us that didn't take this trade because it was the aggressive entry off the wick, right? And this is on the hour. It didn't really come into the smaller imbalances on smaller time frames. But overall, what I'm going to go ahead and show you guys, right? I'm going to let this play out. And that's kind of my in-depth, move already for this week or, for this call. As you see, what does the market instantly do? It moves down and again. This is a 2.5 to 1 ratio if you're entering off the 61% off the bottom of the imbalance. What if you wait till the open of this candle? Now you get to risk 11 pips. For anybody that's new, you should always be putting stop losses just above the previous high. If this is the previous high, that's where you'd want to put your stop loss, right? Because again, think about retracements, 0 or 100 down to 0, which is right here. As the market comes back up above the 50%, this is all discounted prices up until you reach the top. If the market were to break this high, I do not want to see it sell anymore. It is still in a buy structure, right? So overall here, you're risking 11 to gain 50, right? Almost a 5 to 1 ratio. Even if you were targeting these lows, there's your 3 to 1 ratio off bat, right? So that's really what you guys want to be looking for. Now, this took a while, but I'm going to show you, but you're going to see how this market perfectly, right? We're going to get rid of this. I'm going to get rid of this. I'm going to let it play out. And you guys are going to see how the market comes and creates another pool of money right here. All right. But eventually it's going to come dip down into, so look at it, creating those wicks, creating just, pools of money. Yes, there's buyers inside of this market that are making money to the upside, but overall, this is what the target is, right? We know that this is the target because they're leaving these equal wicks here, right? They actually come back up into the old imbalance area. All right, let me go ahead and delete this, right? You would have gained, your 40 to 50 pips on this. But overall, this same thing that happened here happens again. Just watch market play out, right? What are we doing right now? We're kind of just creating, when you see wicks like this, you're just kind of creating equal highs. All right, so I let it go out a little too far, but still see how they move sideways. Here's all Asian session, right? Let me turn on session breaks since I know we had a question about it. Right? Look at this. Asian session consolidated for Monday, right? This was a big Asian session move. This was a big Asian session move, but overall, it's normally going to look like this. Asian session consolidation. Click the wrong one. I want to make it a different color. Let's make it, we'll make it purple. All right. Asian session consolidation between 6 p.m. all the way to midnight or 2 a.m. or so, right? And then again here, Asian session consolidation, right? And as you see right here around New York, that's when it started making the move, right? But check this out. Look how they move up right before they move down. They move above these highs right before they move down. And what did they move down into? Our candle closed right in our imbalance. Overall, they had to pull it down a little bit more and actually created an equal low here. See that? It's not by accident that they stopped the market there, right? They left that there because at some point later on, they're going to come take this pool of money to come move into this imbalance, right? But check this out. You even could have been buying down here, stop below the low, you know, it might have tagged you. It's whatever. That's how it be. But look, still only a 12 pip stop, 12-point stop. That's the risk to reward that you want to look for, right? And then overall, I think we go ahead and see this market, you know, come back, dip back down a little bit and to a retracement. And so let's just peep this, right? Look at this. You want to buy between the 61.79, takes off from there. And then to end off the week, the market really came back up and was taking these highs. Very bullish price action to end off. So this is really the main move that I had from this week. You literally were able to play the sell position, perfect on the 70% retracement, 79% retracement. Same with the buy position. You were able to take it there. A couple other entries in between. You know, to be honest, I did a lot on the 15-minute or on the hour time frame. Beautiful plays. Yes, absolutely beautiful plays. And again, that wasn't as clean on smaller time frames as you guys may see me break it down, you know, more often than not. But overall, we'll just peep the same thing quick. Consolidation, run up, money move down, retracement, take your positions here, right? This was the smart money move up, right? So really you could play, and you guys already saw this, we were really able to play kind of that wick right there, move down, right? So let's go look at the second move that happened over here, right? Look, money, move above it. Keep this on the 5-minute. You're going to see the same thing, right? It's just to train your eyes. Right? Equal money right here. What do? One up candle, down move. Here's your retracement candle. Where? Right into the body, the open of that body. Though stop up here, it's over. You wait for this candle to close, it's over. And we caught this. This is what the rest of the squad caught right here. And then this is where you could catch your, you know, your Elliott wave pattern, right? Catch it on the retest down. You could catch it on the retest of this structure. Catch yourselves here. A lot of the team caught this retest of a structure. Because you don't have to catch this sniper entry right here. You don't have to catch that. Wait for the money to move down, create your new equal low. Now you could really just take any retracement above the 50%, almost tag 61, and it's over. Right? You catch any of those retracements, market move down into our take profit, and that was pretty much it. But other than that, you know, again, for the other indices, you guys would have seen pretty much the same moves. For anybody that hasn't heard this before, NAS pretty much runs the show. We're at all-time highs for NAS and US 30. Again, you see the same thing. Market opened with the gap, liquidity, move up, never came back and retraced it, but did give us that similar setup here. And we pretty much ran it up. Cool, perfect. So I'm going to go into some charts. I actually have 2 charts from Sarah that I'm going to pull up. If anybody else on the call, any questions over what I just went over on the second half of S&P, more than welcome. And then we're going to take a look at some of these other plays, right? You guys can drop anything in the chat. So we're going to look at U-CAD on the 2-hour right now. We're going to walk through this. Again, exactly what I just did on the S&P, on the daily, on the hour, on the 5-minute. If you guys just do that over and over and over again, use these confirmations, then you're going to be good to go. Confirmation number 1, trend in market structure. Confirmation number 2, where's the money? 3, imbalances. 4, Fibonacci. 5, Wyckoff. And 6, your session timing. So check out U-CAD on the 2-hour, right? Now, I know she has this labeled as number 1, but I'm going to start here, right? Check it out. We have a pool of liquidity, right? All these equal lows. What happens? They make one more equal low. They have a drive down, which is the institutional candle down. You see money get back up behind the move. did have some small retests here before it left the imbalance. So as you move up here, you see that this broke structure, right? So that shows us that this institutional down to move up broke structure, low, high. Now what are we looking for? A higher low. Break a structure, you guys see the clean distribution that happens in here, right? Smaller time frame, probably beautiful play, moves down, trades into the imbalance, right? You guys see another small term accumulation here. Equal lows, candle down, move up, retracement, move up, leave these equal highs. Now overall, market's going to move down one more time, take these lows, play into our institutional candle, right between 7 and 8 a.m. Eastern time, right? Make our lower lows and deep retracement, stop loss below this low, and market takes off. And what does it do? It achieves the highs, right? Don't think I'm just out here, leveling off areas of liquidity just because it's fun, right? I'm not just doing this because they're equal. No, because I understand that these are targets. The institutions have to bring the markets back to here, right? Just like Sarah's showing us on Euro USD. So this is beautiful. This should be screenshotted, put up on the wall, and everything. Like this is absolutely beautiful. And even on a 2-hour time frame, that I'm normally not even peeping when it comes to the 2-hour, but cool. Yep. Catch you next time, Bobby Pippin. Let's get it. You could have played mitigation off the imbalance too. Exactly. And we can even go into that before we let this call end off. So I'll pull up U-CAD real quick before we peep Sarah's other chart. Right. Let's see what we got going on here. So that imbalance play that we were just talking about is pretty much this right here. We had, and how would I identify this imbalance over here, right? Or how would we identify this imbalance over here? Where price had no retracements, right? See how these wicks came back and retraced, market move up, retrace, market move up, retrace, right? But in here, there is no retracement, right? Right here, about 35.25. I love quarters theory, right? 35.25. So let's check this out. Come over here, and what happens? Same thing. The market was creating all these equal lows. So what did they do? They had to drive down into the imbalance. You see money get back behind the move, right? You see this gap right here. So this must have been a market open. This was actually open of the week. This is where we opened. We moved down in the imbalance. We came back up, created a target of equal highs. Market retraces back down, tests off 35.25 one more time. And again, what do? You take it off above the other highs. I want to peep this on a smaller time frame. And let's just see how these mitigation plays happened, right? Again, look, same thing, right? You still can't see the clean mitigation play. We'll break it down on the 5-minute, but overall, look, pool of money, move below it. Right, now we're going to go back on the 5-minute. Let's see if we can get a mitigation candle. If not, I'll go back on the minute, right? So now we look in here, right? Drive down, move up, retracement here. Still, everything was retraced in. Again, this just wanted that quarter level one more time because if it didn't make this pool of money, it probably would have taken off, right? And that's actually something I forgot to touch on right here real quick. Just super quick, right? See, we knew the market wanted to sell off in this area, right? But we honestly wanted this We thought this was going to happen over here, right? We wanted this to happen over here or even in any of this retracements. But overall, they needed to come catch a little bit more money.
Stop. Easy. Going crazy.
Cool. So I know we didn't have any candles, but let me just show you guys, right, before we peep the other chart. Let's see what it shows here. Right, so now I'm going to go into this price action just to see where our 1 minute imbalance would have been. Right, I'm going to go ahead and get rid of this. Right, so check this out. Look, pool of money, candle down, move up, had the retracements. See how, again, so there really wasn't one. It was just 35.25. It really did fill most of it right here. But either way, you know, again, just the way this was happening, this candle you can see is obviously a down candle before the rest of the up move, right? But yeah, super clean with U-CAD. That markup, Sarah, was absolutely beautiful. Let me check the new one we have in the chat. Beautiful. So US 30. So again, you guys saw me on US 30 briefly. We did not fill the rest of this imbalance or even get any type of deep retracement into this, you know, this area right here, unlike we got for S&P. S&P, I really think, is the one that gave the best play there. I don't know if NAS did, to be honest. Nah, NAS has been leading the pack and not really showing too much bullishness or bearishness. I think that was even right here. See how NAS actually broke it, so we're not even going to worry about that and confuse anybody that's not following along. But it's good. But yeah, again, same markup that I had right here. We have for US 30, right? We have a you know, a whole quarter level right here around like 26,250 hanging out right here. So this is also something that we could be waiting for next week. Wow, it's actually kind of funny. US 30 is actually lagging behind now because SPX broke the highs as well, which is interesting. But EU on a higher time frame, right? Okay, yes, this was another clean one. You guys see that, you know, even on the daily, it might be a little bit cleaner, but overall, we had kind of an institutional up candle, down move. We had left this imbalance with a lot of equal highs right here. So what do you guys see happen on the 4 hour? Up candle, down move, right? I'm sure on a smaller time frame, there's a mitigation play here also with the 88 off of that imbalance. So again, it's the same thing over and over and over again. Caught EU on the 15 after the break of structure. Lewis just said, I'm going to pull Lewis's chart up next. Let me just go peep EU quick. And then we'll definitely get into some setups for next week. I think I still have, man, I had fun making that quarters level video. Let me refresh my mind here. I was going to peep this on the daily quick. So again, guys, this up candle should stick out to you. Get out of my way. Right, I want this to stick out to you. Move down, all these wicks, up. Let's peep it on an hour. Right, it's just a lot of price action to show you guys, you know, what happened on the hour. But overall, again, look, I'm going to point out that imbalance that Sarah had up on the bigger time frame, right? From here, whoops, nope. See this? Wick, open, flat top. Had left that imbalance right there. Never came back and retraced into it. So what happens over here, right? Pool of money, pool of money, pool of money, pool of money. runs up. What's the candle that ran up and pushed through it? These candles, right? Were you taking retracements? Those candles. Right, and this is probably going to be exact, you know, if it's not this one, it's definitely a different 15-minute structure setup that Lewis had. I'm going to peep his chart next, but look, I'll go ahead and delete this. Same thing. Pool of money. Run up. Evidence of money get back behind the move, creating these equal lows. Right? The retracement back up. You know, again, this isn't a deep retracement, but it got to 50%. You know what I mean? And again, you could be playing this, you know, again, that's your aggressive entry if you want to take that. Right? That's your aggressive entry if you want to take that. Anything above the 50. Overall, they left a pool of money at the 50. But as you guys see, there it is. Let me just peep this on the 5-minute. Yeah, it's really this candle. See how strong that just up candle was? That's where those retracements were. Right? And you even see it up in here as well. Look, up candle, down move. Right? Up candle, down move, up candle, down move, up candle, down move. This retracement as well. Right, but let's peep Lewis's chart. Let's see what we got going on. Let's get it. Let me pop back out. All right, cool. So check this out. Right, we got EU on the 15-minute. It was actually exactly what I was just showing as well. And like you guys see, he's got his confirmation checklist up top, looking for structure, point of interest candles, institutional candles, your IPAs, right? Which is your, I'm totally insufficient price action, right? I don't know why that word was missing. And then you got liquidity and targets and fibs, right? So overall, he saw that break of structure to the upside. Well, he saw that swing high, that U-CAD up thrust after distribution, saw the break of structure to the downside in here, right? Broke the lows. So what does he do? He pulls out his fib from the low to the high. And this is perfect too. You guys saw me pull my fib from this high to this low. I love this. I love this just as much, right? You don't gotta, you know, you don't have to draw it just like I do. You play off whatever, you know, up candle you want to play off of. So check this out. Let me just, right? So maybe it's these that you play off of, right? Now look at the retracements that you get, right? So that's beautiful. I love how you did that fib, bro. After the break of structure, he pulls out his fib. He's taken anything above the 50%. As you see, it dipped up into his high retracements. You're able to take a low trade set up there. Entries around 13. Look at this entry though. Look, 13. What's right here, y'all? 1350. It didn't quite get there. It was so close. But either way, you could pull the trigger, right? 1350 right there. What are you doing? 1370. That's a 20 pip stop, right? You could have done it above these highs, which is a 15 pip stop, right? Right, my man's working a 15 pip stop right now. What did you do? You target the pool of money. You target the lows. Look how they, oh my goodness, look how they perfectly run the lows with another institutional candle, right? You take your trade. This, what type of ratio did you throw on them, bro? Let me see this. Let me see this.
Yeah, it was a 1-to-6.
1-to-6. That's what I'm talking about. That's what I'm talking about. Yeah, it was a little higher entry, a little shorter stop loss, but yeah, 6-to-1, 1-to-6 ratio, y'all. Right. This is absolutely beautiful, and you even see it back to the upside. as well, right? When we look at this price action on the 15-minute, right? Same thing. Institutional candle move down. You see money get back behind the move. No, this isn't a deep retracement, but understand that these are just sells to buys. Right? Just tagged under 50. These are just sells to buys. Right? That's a beautiful chart though. Both of those are absolutely tremendous. Let's go. We got more charts. I got stopped out of this, but it was still nice. AU. Man, yeah, she did it. So the thing is that sometimes, again, like nothing's 100%, right, guys? We know that nothing's 100%, but sometimes the institution simply just didn't take enough money, right? So sometimes they got to take it one more time right here. So if you would have initially been trying to play this imbalance or, this entry right here, 69.89 with a stop above the high, right? It would have got you, but you could take that L, right? Or, now that I look at it, I don't even know if it should have been an L, because if this initial entry right here, this didn't break the high, and we see these moves, this pip range down to 69.70. I guess it's only like 19 to 20 pips. So not really what you want to look for, especially the targets of equal lows. But one more candle up. You still see the nice retracement on the area that we were supposed to retrace here. And market moves down. So yeah, this is absolutely clean as well. As I'll just go pull it up on my chart real quick. Right, so this was that institutional candle. You guys see that it did give, even that play here, right? But overall, there was still maybe some liquidity hiding out in here. Even made a good institutional move, but, all of this happened a wick higher up. Let's see what we got on smaller time frames. Right? So again, same thing. Equal highs. Candle up. What are we doing? Taking entries off that candle. So yeah, I had a couple different setups on this one. Either way, really nice and beautiful. And again, you don't have to catch that pew. You let the market structure break. Now you pull out your fib. Boom. 61. Now again, if they're not coming to mitigate a candle, sometimes they don't have to come up into the deep retracements, right? Sometimes on these markdowns or whatnot, they're only going to tag 50%. They're only going to tag 23%. Right? That's actually probably what happened to SPX and US 30. They probably tagged just under the 50%. Right? What do you think about UJ? Loving the chart. Beautiful. I love doing even trend line liquidities here. Beautiful liquidity trend line with an up candle. Absolutely broke structure. We have another liquidity trend line here. I absolutely love it, bro. I absolutely love this. Again, the thing is that we have moved 100 pips away from this mitigation area, but this is so clean for when the market does move back up. And you know what I notice here? We're at price of 107.97. So hey, if this market when this market comes back up to 108, you already know that I'm taking a sell. You already know. The stop loss is going to be like 10, 15 pips. Right? Look at this. Whoops. Look at this. Right here. throw a stop here. Now, again, it could be weeks. Either way, though, you're going to have a 17 pip risk. You're going to have a 17 pip risk. Like, there's nothing really better than that, right? Sets alert. Yeah, right? Yeah, let's set her up. We'll do it later. But yeah, that is real nice. That is really nice for you, Jay. I love it, bro. Super clean chart. The only thing is again, it did move down pretty far. So, in order, I'm not going to say it's foolproof, right? In order to want to take this sell setup, we are going to want the market to have pools of liquidity to the downside still. So like if this market were to start marking up right now, we are going to want it to leave pools of money for it to come sell into, right? So you would like take an entry here, stop here. This would be like TP1, right? And then you can grab another entry, right? Stop loss here, TP2, right? And then you could take, again, a third entry or, one entry and just, practice on, closing partials. You'd have money up here. But as for next week, obviously, yes, it could move up. It could move up 100 pips, and that's something we'd be looking for. But we do have, even this could be a price alert set. Look, we got this little institutional down here. We got a little bit of imbalance still hanging out here. And this is something, again, if you want to throw a stop loss below this low and take something at 106.60 and throw a 15 pip stop loss at 106.45 and, maybe target these equal highs, like say market opens, market gaps down. Watch this happen though, like no joke. Watch the market open up right here, close the first hour candle here, take another candle, wick down in here, and then see your money move up, right? Maybe not in one single candle, but this is something that I would look for Sunday night going into Asian session. My first time on the session. What's your schedule? Honestly, I haven't been doing a whole lot of team, trading webinars like this when it comes to institutional. Again, with the access that we have inside of the education, there's just really, again, nothing better than that. But, we're always dropping new, I got a lot on my YouTube. We're always dropping new videos. We're about to be together with the squad out in Orlando. So I got a lot more trainings to come. We've just kind of been behind the scenes lately. And kind of just making sure everybody is getting to the same page, right? Been doing a lot of one-on-ones and stuff like that. But we normally have a couple institutionals throughout the week. Ronald, glad you're following along, brother. Beautiful there. Let's make sure. I think there's one more chart. Nope, that was all good. Yeah, so y'all, that's literally it. UJ's got some clean entries here. We didn't even touch on the dollar index, which is fine because honestly, not a whole lot of crazy stuff went on with it. Pretty much just had, two moves down. Did have a retracement back up. Really just honestly still kind of looking bearish when it comes to the dollar index. Yeah, tripping right now. I didn't even care about it. That's why I was really only focused on, the indices this week. Gold also. We took some nice trades on gold to start the week. Nice buy positions on gold. Sell positions on gold, I believe, to start the week. I'm on the hour. Yeah, look, this was so nice that Gold Cup sent this out for us, right? Market consolidated after, I'm pretty sure that was NFP, market consolidation, market opens up, dips below the lows. We caught this 100 pips, right? We caught this 100 pips off 1772, right? Up to 1785. Market moves back down, goes for another 150, goes back up, and then just kind of hangs out. But there were some nice buying opportunities up inside of this price action. Looking for this to move up. I'm low-key in a buy right now, but that doesn't mean for you guys to buy. Again, I caught a lower entry down here. I just kind of like how price is moving right now. And also last time the whole squad met up in Orlando is when BTC went from like 8K to 13K last summer. So looking for a repeat. Come on, BTC. So look, last June. So yeah, it was June. It was the end of June. It was the end of June when we ran up, where we ran up from 10K to 14. So as we're sitting at it right now, I know I got a lot of lines in here. I mean, I could clean it up, but I'm not going to. Overall, we do have quite a bit, you know, of money hanging out here, right? We got an imbalance hanging out right here, right? So on smaller time frames, or even on a 4-hour, because again, I'm not intraday. I don't intraday trade BTC too much. You know, normally it's for a couple day, you know, swings, whatever it may be. But overall, we do have nice imbalance here, nice imbalance here, nice imbalance here. You know, even though we got a lot of wicks right here at 9,088, if the market were to break below this low, I think we would probably come run all of this and dive into this price action down here at 8,000, right? So unless we're going to 8,000, I would at least like us to run up above 9,500, right? That's where this line is. Run above these highs, see if we can get some stuff in here. Price is looking pretty decent. As for right now, right, I really like, this is why I entered, to be honest. Right, lows, candle down, break a structure back up, retracements, running up, right? You could focus in on here, right? Wherever you want to focus on. But either way, you know, again, if you're not already in this, I mean, again, you know, my stop's down here at 91.15. So it's like, if you were to take an entry now, you got to risk 150, 200 pips. But, you know, maybe that's something that your trading plan, you know, entitles you to. Sarah's got a DXY. Oh, no, she got BTC. Lit. So, look, she's actually got something right there at 97.30. Kind of the same, you know, insufficient price action, imbalance areas that I have. The daily imbalance, as she has pointed out, right there at 8,000. Again, guys, all you got to do is trade your eye. Once you see it, you know, once you see it once, you just gotta see it over and over and over again, right? So look how, you know, look how beautiful this is. Now all Sarah has to do is wait, right? All she has to do is wait. I haven't traded GJ in a minute. Doesn't even matter. Other than that, unless you guys have another pair you really want me to go in depth of, I think that's pretty good. We went over a lot. We got some UJ plays for next week. To be honest, when SPX opens on Sunday, I'm pretty sure I want to be looking for a sell position. We have closed. So remember how we didn't get those smaller 5-minute, 15-minute imbalance retracements that I went over at the beginning of this call? That's where market closed. So now it is pretty much, do you think UJ is setting up for a buy under 3-minute time frame? So the thing is I could go look at UJ on the 3-minute time frame, but you know, and I don't know, and I know Ronald, it seems like you're newish to the markets, so I don't know you know, just how deep you are, but we definitely want a little bit of price action to play out first on Sunday, you know, before we start making any decisions, especially when it comes to smaller time frames. Like I said, overall, what if I were to take a setup on Sunday, it's going to be this buy setup, right? Or the next, the next setup I would maybe take is a sell setup right here. But, overall, if the market's bullish, I don't want to be looking for this sell setup, right? So, when you ask me about, oh, actually, I may just be disregarding. Do you think you're just setting up for a buy on the 3-minute time frame, right? So if I go to a 3-minute, I think the possibilities for a buy is phenomenal, right? Because what have we done? We've completely made an equal pool of money right here. But there is also areas for this market to come retrace into. And as I pull it up on the 3-minute, I hope y'all can see it. Pool of money. Down candle. Money move up. Imbalances have been left. So now that I look at it at the 3-minute, maybe I don't wait for my 106.60, right? Maybe I take an entry. Maybe I take one initial entry here at 106.70 and throw a stop between, 106.63. If it stops this, maybe I'll take the other one. If not, it's whatever. But yeah, great buy opportunity here on this candle. Again, we also have an imbalance lying here. We also have an imbalance lying here. So I think it is, yes, setting up for a great buy opportunity. But again, if you're going to take the buy, you want to wait till you're at least discounted 50% or more. Which means not this imbalance, but possibly anything here. Right? I don't know what that was from. Right? Possibly anything in here. Or, again, it sweeps the low, dips bigger into this imbalance, and runs. But, yeah, that's what I'm kind of looking at for UJ. Good looks. Cool. Perfect. Oh, yeah, I was going over SPX, right? So, yeah, just a move I'd be looking at. Again, I think any sell positions are invalidated now. Especially, this was the number one invalidation. Now that we moved into it outside of session, this is now all just equal highs. So let me go back to the 4-hour. Right? So now it looks like our target is going to be achieved of these equal highs that are here on SPX as we move above it. Now what we'd want to do is go look into this price action to see if there's a short-term sell opportunity before rerun these highs, right? So let's go peep the hour. Whoops. Right, and I'm actually going to go ahead and mark off on a horizontal line the current high that the market has hit. Whoops, did not grab my horizontal line. Right, so anything above this line that could be an imbalance, I see absolutely nothing. Why? Because look at these retracement wicks. Right? Nothing has left an imbalance. So again, my focus kind of is 3,200. Again, if I were to take something there, stops are up here and it's probably just too much. So maybe it's not as clean as I'm remembering it. Let's just go peep it on a 15. So, right, 31.93. So this is kind of what I had remembered from last week. Because overall bullish, I want it to break these highs. If it is to give us rejection, though, early on Sunday, market's right here now, opens up. Hey, if it come and plays into this candle, right, which is right above 3,200 or even 3,200, which is this imbalance, again, it's all about using a proper stop loss, right? If you want to take something here, just run a stop here. But honestly, UJ is looking even better, right? But yeah, if not, if it doesn't stop there, then we are definitely going to be moving above these highs up over into here. And again, there's just major, not only major money, major imbalances as well as we move towards 3,300, right? But honestly, that's what I got for you guys. Y'all are troopers. Monica, Michaela, Lewis, Sarah, Axel, Ronald, everybody else that has been in and out of the call. I seriously appreciate you guys so much. I love doing these webinars. I'm enjoying getting them up on YouTube. So make sure for any of your individuals on the team that may not have been able to tune in tonight for Saturday night, you can shoot them over my channel so they can go ahead and catch the recording. And let's get it, y'all. Plug into the educators right at the end of the day. I'm not the one that's, sending out most of these setups. Right, they're coming from our products, they're coming from our educators, and I'm just, again, always super grateful for them, showing us the way, helping us out. And we got a big week coming up. Everybody about to be in Orlando, so definitely excited for that. Team's going to be trading all together, doing pretty much everything. So much love. If y'all got anything, the floor is yours. If not, we'll be back at it tomorrow. Catch the calls. Money moves only. You already know. Love y'all.